I'm John Hanna for CDTV.net in New York, and we have Dirk Van Dijk, Chief Equity Strategist at Zacks.com, joining us from Dayton, Ohio. Hey, Dirk, good afternoon.
Good afternoon.
So, Dirk, we got we're talking about before going on to this conversation here is that you said that there's a lot of numbers out there, and why don't we discuss the what you said earlier, which is the GDP.
Yeah, I mean, we've got a lot of numbers and a big debt deal, and it's. I'm afraid I don't have a lot of happy news today.
Oh,
The in the second quarter we only had 1.3% GDP growth. Now the consensus was for like 1.7, and that consensus had been coming down, over the sort of 3 weeks going into it. And, I was kind of at the low end. I was sort of saying, 1.5, 1.6 type thing. We got 1.3. Now, here's the weird thing. That actually now is an acceleration from the first quarter, which now is pegged at only 0.4% growth. That's down from 1.9. It was the annual benchmark revisions. So we actually had numbers that were revised all the way back to 2003, but the biggest revisions were in the past 3 years and the most recent quarters. The quarter was actually revised down to 2.3% from 3.1%. But there were also some upward revisions to some of the earlier quarters in 2010. Like the second quarter of 2010 was a lot faster than we previously thought. So overall, the strength of the recovery, since the second quarter of 2009, when the recession supposedly ended, is really unaffected. But the depth of the recession was far, far worse than we had previously understood. Awful, the worst since the Great Depression, et cetera, et cetera. But in the fourth quarter of 2008, previously we had thought it was, we had been falling at a 6.8% annual rate. We're actually falling at an 8.9% rate. And then in the first quarter of 2009, we were, instead of falling at a 4.9% rate, we were falling at a 6.7% rate. So, I mean, the economy just basically collapsed back then. And, we've been recovering, and, it shifted the pattern, and the, essentially sort of the late 2009 through early 2010 was actually somewhat better than we had previously thought. But, which is when we actually had the bulk of the stimulus spending. But then the tail off afterwards has been a lot worse, in the fourth quarter of 2010 and the first quarter of this year. And you look down the components of it. In the second quarter, the consumer was simply missing in action. The consumer was 70% over 70% of the overall economy, and it just 0.7 growth points, out of that 1.3, 0.7 was from the consumer. And then, the news has not really gotten any better. We had the ISM survey come out on yesterday for July, and that showed that in July the economy just the manufacturing side slowed to a crawl. It's a sort of a magic 50 index where 50 was the so break even between growing and contracting. Well, it came in at 50.9. That's down from 55.3 in June. And you just go back a few months to March and April, it was up above 60, which is an extremely strong reading. That's sort of was saying that manufacturing was booming. So basically what I'm trying to say is that it's very hard to feel that optimistic. We are we've been sort of fueled into a weak virtuous cycle by the stimulus spending, and it was starting to take hold. Right, we're seeing much better private job creation than overall with government. Cutting jobs, but we've really slowed to the stall speed. Right, so that virtuous cycle is on the cusp of possibly turning into a vicious cycle. And I mean, there are a couple of temporary things that will have been depressing activity that will be coming off, but it's really hard to see that that's going to be enough to really ignite a positive virtuous cycle. And I think that people have got to be seriously reassessing the sort of growth rates that we're gonna have going forward. This recent spate of data is just really ugly, and the debt deal, while it prevented the absolute catastrophe that would have occurred today, is not good for the economy over the next couple of years. Fortunately, it looks like most of the spending cuts are sort of back-end loaded, but it's still going in the wrong direction.
Dirk Van Dyke, Chief Equity Strategist at Zacks.com, joining us from Dayton, Ohio, and I'm John Hanna for CDTV.net in New York.